Hoopla is hooey. It's also always pre-priced in capital markets. The stock market has taken everything that people talk about, widely get excited about, think is really good, and pre-priced it before we ever get to the reality of it. Hoopla is hooey. When you think of the infrastructure bill, there's a lot of people who have presumed that means that governmental spending on infrastructure-related items will help buoy the stocks of infrastructure-related companies. It could include materials and industrials and various types. In reality, there's pretty much none of that will occur. First, the pre-pricing and the hoopla has already happened. The pre-pricing and the hoopla will have happened before the bill ever was passed. Secondarily, in the passing of the bill and the couple of thousand pages that involve it, most of what is in that package, which will occur, maybe, most of it is not what you think of as hardcore infrastructure. Most of it is other stuff. Really, there's only about a little over 10% of the $1.1 trillion that's real hard infrastructure the way we normally think of that, roads and bridges and ports and airports and just the hard stuff that uses concrete and steel and glass and what you think of when you think of infrastructure. And then on top of the fact that it's a smaller amount, it's spread out over quite a few years. Because, in fact, one thing that we've learned from the past is there is no such thing as infrastructure that's shovel-ready. You'll remember when President Obama, when he was first elected, allocated $100 million for shovel-ready infrastructure. If you remember, pretty much none of that ever happened because there wasn't any, and there isn't any now. It takes such a long time in the permitting process, the planning process, and all of those things to get to where infrastructure ever can be put into the ground that it's way out in the future. And things that are way out in the future, markets tend not to deal with today. And then finally, because a lot of that is way out in the future, and I want you to think about this because I don't think most people do, because a lot of that is way out in the future, including the parts that aren't hard infrastructure, there'll be another budget next year, and a budget the year after that, and a budget the year after that, and a budget the year after that, and all of that can be redone and downsized, redone, rejiggered, changed, and maybe ends up being something completely different than what's in the bill today. If you want to think of this bill as 1.1 trillion, you're thinking about hoopla. If you want to think of this bill as something that might be 5% of that in a wide variety of things, half of which you can't even figure out what they are, much of which is going to be stupid stuff, and the rest of it to be reconsidered next year and reconsidered the year after and reconsidered the year after, and maybe something happens and maybe doesn't, you're thinking about it correctly. So therefore, it has very little power on stocks today, while the hoopla has had people think infrastructure stocks should do well. When people think something should do well, because of a fundamental feature that they think will occur that won't occur anytime any too soon, it's probably more likely that the stocks don't do well. Subscribe to the Fisher Investment YouTube channel if you like what you've seen. Click the bell to be notified as soon as we publish new videos.